What's up guys, welcome back to another video, and today I'm going to be taking you through RSI divergence and also showing you a really cool and effective trading strategy you can use with RSI divergence. However, just in case you guys don't know what the RSI is or don't know what RSI divergence is, I'm going to take you through a very basic demonstration, a couple of slides long, just to explain what the RSI is and also explain what RSI divergence is, okay? So what is the RSI? Simply stands for Relative Strength Index, and it measures momentum of live market movements. It's used most for technical analysis and can be used as an aid for many trading strategies. Okay, so mainly the RSI is used for directional biases. So if you're setting up for sell trades, you want to get confirmation for the RSI. If you're setting up for buy trades, you want to get confirmation for the RSI. And I'll take you through what exactly traders will look for in that instance. So here's an image of what the RSI would look like. You can see this squiggly line in the middle. That is what we're looking for. That is technically our indicator. All right, so RSI dotted lines at the top and the bottom here. The top area is considered as overbought. So if the purple line is coming into the overbought region, this is where traders will start setting up for sell opportunities, and obviously they'll look on price to see if there's any supporting data for that sell. And the opposite is down below. If price is coming down towards this dotted line, it's considered to be oversold and that you should be looking for potential buy opportunities, okay? And that is the directional bias of the RSI. So here's what the RSI looks like in a live trading chart. So the RSI and price give similar readings. So if price is bearish, RSI is generally bearish. If price is bullish, so is the RSI. Generally speaking, this is the sort of directional bias that we're looking for as traders to give us some support and evidence to trade on, okay? So there's two rules you need to know with the RSI: is overbought and oversold, as I just mentioned. So it's the sort of the main use for the RSI. So there's two key reading levels, which is the 70 level and the 30 level. So they are technically barriers for the overbought and oversold conditions, which is the two dotted lines that you see above and below the indicator here. So top dotted line is overbought barrier, bottom dotted line is oversold barrier, okay? So that's the RSI, guys. Very basic introduction there. So what is divergence and why is it helpful? So when divergence is when price is moving in the opposite direction of a technical indicator. You don't just get divergence on the RSI, you can get on the Stochastic, the MACD, and there's a few other indicators you can use to measure divergence. So divergence is a strong signal that the current trend / move could be weakening or could be continuing. All right, and there's two categories of divergence. You've got regular divergence and hidden divergence, okay? And there's obviously four types in there. So you've got regular bullish, regular bearish, hidden bullish, hidden bearish, okay? So regular divergence signifies a trend reversal, could be on the cards, and hidden divergence suggests that the current trend could be continuing. So here's an example of regular bearish divergence. So you can see we're in a nice downtrend on the left-hand side of the screen. And remember, this is regular, so what we're looking for is some signs of weakening in the current trend, and a reversal could be on the cards. So you can see we've got a lower low on price, and we've got a higher low on the RSI. So this is divergence. So you can see so that price and the RSI are given different readings in terms of direction, and this is divergent. Okay, so this is the signal that traders will be looking for and looking to capitalize on. Okay, and as you can see after this reading, price moved up and reversed, okay? So here's an example of hidden bearish. So hidden is a signal that the current trend could be continuing. So on price, we've got a lower high, and on the RSI, we've got a higher high, okay? And as you can see, price continued down. So here's an example of regular bullish divergence. So we got a higher high on price, and we got a lower high on the RSI. So remember, regular means that the current move could be weakening. We're looking for a reversal. We're looking for signs of a reversal, excuse me. And price reversed very nicely there. Good trade if you got in around the top there. So hidden bullish, we've got a higher low, and we got a lower low on the RSI. And as you can see, price did continue upwards. Now guys, these are just examples. I don't want you guys to think that this succeeds every time, because it doesn't. I do trade both of these divergences and my stops do get hit, so it doesn't, there's no 100% win rate here. I'm not trying to say any of that, but just be aware this doesn't work all the time. It's just a very strong signal to use as confluence for whatever strategies you guys may use. And I'm going to run into a strategy right now with you guys, and we're going to jump into charts and see if we can, and I'll show you guys what I was trading this week. So we've got one, there's the other one. So we got 3 trades I traded this week using hidden divergence. So what I'm going to do is just reverse price here. So there's a couple of adjustments I like to use for this strategy. So first off is I like to use the 200 EMA. And what that does is gives me a directional bias of what trades to be looking for. So if price is trading above the 200 EMA, I'm looking for buys. If price is trading below the 200 EMA, I'm looking for sell opportunities, okay? So you can see here, I was very interested in this market because we got a previous low on price. And you can see price still moved up and created a higher low. However, on the RSI, we got a lower low on lower low reading, and on price we got a higher low reading. So this is divergence, guys, just in case you guys can't see that. We've got nice divergence here, okay? So another introduction I like to use for this strategy is the stochastic, and all I'm waiting for, all I use the stochastic for is entry signal, okay? So you can use your eye and look for strong candles supporting the trend or supporting your direction. So in this case, you'd be looking for a bullish engulfing or a strong bullish candle, or some sort of rejection of the 200 EMA. However, for me, what I like to do is wait for a crossover, a smooth crossover on the stochastic, and that's my entry signal, okay? So as you can see, we've got a nice smooth crossover. The lines are very clearly apart around this area, and that was my entry signal. Now, in terms of targets, guys, I like to generally go for a 1 to 2. However, if there is a resistance zone or support zone you can match your target up to, then by all means go for that. If it's a higher than a 1 to 2, go for it. Okay. So in this instance, we had a 1 to 2, quite a long trade, but I held it. It came back down to entry, I believe, yeah, and we ended up eventually taking profit, like so. So had I moved my stop to entry, I would have been taken out at break even, which is still a win in my books. However, after this consolidation period, you could have taken profit as well. However, I did hold this trade, and we ended up hitting our 1 to 2 target, which is fantastic. So quite early on in the week, I was up 2%. So that was Aussie yen. Now we're on CAD Swiss franc. And as you can see, very similar setup, guys. This one was quite close in terms of the divergence. We got a very small higher low and a massive divergence lower low on the RSI. So you can see we are slightly above this previous low, as you can see. So it doesn't matter how smooth, what's smooth mean? It doesn't matter how small the divergence is, the height of the next low. If it's above the previous, it's still divergence, okay? As long as these two are matching, RSI and the price are divergent, okay? So as you can see, setup was met here above the 200 EMA, looking for buys. Now all I'm looking for is a crossover on the stochastic. As you can see, we did get our crossover, and I believe this was like no drawdown, and we ended up hitting take profit pretty quickly. Nice 1 to 2. This was 2 to 2.6 actually. So you can see what I mean by resistance zone. So 1 to 2 would have been around this area here. However, we had a previous resistance zone that was higher than the 1 to 2, so a little bit of extra reward on that took us to a 1 to 2.6 for the week. So I was up 4.6%. And the third trade I took was on Euro Swiss franc here, and you can see this one was quite a, so again, quite a tight one. You had to have a good eye for this one. Let's go down to the 5 minute, might sit better. Nope. I'm going 15 minute. So you can see, we'll just zoom in. So you can see here we did get our divergence. So this again was a small, very small divergence. So what we're looking for is we're not looking for wicks, guys. We're looking for actual candle bodies, and that's what we support as divergence. You can see from this level here, we are actually heading down. All right, and you can see on the RSI, we are heading up. So we got a lower high on price and a higher high on the RSI. We also got another confluence of this candle rejecting the 200 period moving average. It's another confluence for me. Quite tight on that one. So all I was looking for was a crossover on Stochastic, which we did get around about here. I waited for a nice smooth separation of the lines, and that was my entry. And again, 1 to 2 would have taken us just to there. You can see there's a little bit more reward we could have got on that on this trade. As you can see, the previous low hit here, so we ended up targeting that for 1 to 2.2. So all in all, I'm up 6.8% this week. I didn't take a loss, which is absolutely fantastic. So it shows that this strategy is actually highly profitable. Obviously, you guys can go away and do your own analysis on this. But so far this week, 100% win rate. I'm not saying it is 100% win rate because it's not. There's been weeks where I've lost all of my trades using this strategy. That's just the rule of the game, unfortunately. But nonetheless, I do have more winning weeks than I do losing weeks. So as long as you've got a good risk management plan, you know, you'll always be winning with this strategy, guys. So if you did enjoy the video, guys, please leave a like. It does help me out. And I hope you all have a fantastic trading week next week. Any questions, let me know down below or email me. I'll leave that in the description. Have a fantastic weekend, guys, and keep killing the markets. Take care.